Hello, I'm Anna Kasatkina. Welcome to the InstaForex news channel. The US Federal Reserve is strictly following the principle of neither asking nor questioning in relation to the American dollar issue. Do not inquire the representatives of the FRS about the currency. However, if you have, they will tell you nothing but the Department of Treasury being in charge of the US dollar. Nonetheless, the US dollar reacts to the actions of the FRS and Tuesday announcement when the FRS stated that it was ready to render assistance to the economy triggered the traders to sell the American currency. The dollar index ICE, reflecting the cost of the US dollar versus other currencies, fell to a 6-month low. The US dollar weakening is good news for the Federal Reserve. After having supported the markets for many years, it seems to receive help from the markets. If the infirmity of the US dollar appears stable, it will back up the central bank in reaching the two main goals dwelled upon in the declaration, in sustaining the economic recovery and in the inflationary increase. Firstly, a lower US dollar will ascend to the inflationary level after some time by means of higher import prices. Trade-weighted rate of the American dollar hit its peak in early 2002 and was falling inevitably till the financial crisis in 2008, when the investors started to use it as an asylum currency. When the trading contracts accounted for the new currency rates, import prices began to up, having soared by 21% for the period since early 2002 till mid-2008. In its turn, the consumer price index for the non-food items and non-fuel commodities has expanded. When the US dollar was at the maximum, the annual falling of core import prices equaled approximately 1.5%. By 2008, they were growing by 0.5% on the average. Core commodity prices ticked up by 1.3% in August as compared to the last year. The enhancing of these prices will add to the core CPI index on the whole, thus helping the FRS to return the inflation to the levels corresponding to its targets in course of time. Moreover, the FRS will also be backed up by trade. A fragile US dollar is not only making the import more expensive, it also decreases the cost of the goods which are exported from the USA to the world markets. In the result, the sliding currency is to at least stop the growth of the US trade deficit. Nevertheless, the bind between the currency rates and trade is weaker as other factors have their impact, such as relative power of the economy and trading limitations. Even if the trade deficit upturns at a slower pace than in case when the US dollar was strong, it will be a plus for the FRS in its achievement of the mission to support the economic rehab. So this time the US dollar task is complicated by the fact that the majority of the countries also want to see their currencies weaker in order to support their own export and to facilitate the economic growth. Other central banks, including Japan and Brazil, are actively attempting to decrease the rates of their currencies. Their interventions, alongside with the yuan rate strict control from the part of the Chinese government, denotes that the US dollar should not be descending much and for a long time. New global distortions can enforce the investors refer to the US dollar as a safe haven currency. Under such circumstances, the FRS will have to perform all the work with no outer assistance. You were watching the latest financial news provided to you by InstaForex. Goodbye.